Amid President Trump's threat to fire the Federal Reserve Chair, this week's Fastest 4 Minutes in Finance explores if he can do it, and if so, what could happen. Hello and thanks for joining us this week. I'm Scott Inman. President Trump has been threatening to remove Fed Chair Jerome Powell for months over the Federal Reserve's reluctance to lower interest rates. Just this week, Trump called Powell a numbskull at a news conference and said he will be out in 8 months. Powell's term runs through May 15th of next year, and he has said he will not leave the post early. The president's administration even accused the Fed of mismanaging a planned $2.5 billion renovation of the Fed's headquarters. So, does President Trump have the authority to fire a Federal Reserve chair? CNN says yes. The law states the president can remove any member of the Fed's Board of Governors for cause, but they cannot be removed for policy differences, which appears to be the central cause of Trump's angst. So if the president tries to fire Powell, he will need to prove there is sufficient cause to remove him. Powell also has the right to sue. According to a CNN article, he would have to argue that his firing was unjustified and show why it's crucial for him to remain as chair. The other key factor to consider is if Trump fires Powell successfully, it doesn't mean Trump would get the lower interest rates. That's because Powell still only gets one vote on policy moves. There are a dozen members of the Federal Open Market Committee. If Trump moves on his threats, it would also create uncertainty for markets. The unknowns of how long does Powell have to step down? Would he sue to get his job back? Who would replace him? And what impact it would have on interest rates could drive a new round of market volatility. From Dr. Jeffrey Roach, chief economist for LPL Financial, the congressional mandate of the Federal Reserve is full employment and stable prices without outsider influence. As long as the unemployment rate remains low and inflation is slightly above the Fed target of 2%, significant interest rate cuts are unlikely. Roach believes the Fed does have some room to cut a few quarter points by the end of the year, but he points out that if the Fed was even perceived as making moves because of political pressure, longer duration yields on bonds would spike and the U.S. dollar would weaken. We may all enjoy lower interest rates, but we should always be careful what we wish for.
Want to become smarter financially in 4 minutes or less? Sign up at fastest4.com to get insights and updates like this delivered to your inbox weekly.